Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning April 25th. It's going to be a very busy week for the markets, featuring three major central bank meetings: the FOMC, the Bank of Japan, and the Reserve Bank of New Zealand. Several countries' first quarter GDP data, and the CPI data from a number of countries. On the other hand, we're relatively low on speakers this week, with only one Fed speaker on Friday to tell us what Wednesday's decision actually means. The FOMC will be the highlight of the week. The market puts zero probability of a hike at this meeting, and I wouldn't argue with that. Moreover, there's no press conference afterwards, nor is anyone allowed to speak until Friday. All we'll have to go on is the statement. Now, given that the markets heard a number of generally dovish Fed speakers recently, I'd expect even a neutral Fed statement to cause the market to push up the likelihood of a June rate hike. That would probably be supportive for the dollar. There's much more debate about and anticipation about the Bank of Japan meeting. Now, Bloomberg's survey of forecasters showed that almost everyone expects some policy change by the end of this year, and about half the people polled expect it at this meeting. So half don't expect it either. As for what they might do, the domestic reaction to negative interest rates has been, well, negative. And they're already buying up most of the JGB issuance, the Japanese government bond issuance. Now, it was reported on Friday that they're considering a lending facility for banks with negative rates, that they would pay banks to borrow money from them. If that's all there is, then there'll probably be a buy the rumor, sell the fact reaction, and the yen could strengthen. The Reserve Bank of New Zealand rate decision, coming as it will only 3 hours after the FOMC, may get lost in the general market activity. Nonetheless, the market's attributing about a 50-50 chance of a cut, so there's likely to be good volatility no matter what the decision is. I'd expect no change in rates, but a definite easing bias and comments about the New Zealand dollar that will leave the currency weaker. In addition to these three major events, the UK, the US, and the EU all released their initial first quarter GDP estimates, plus Canada publishes its February monthly GDP number. Now, growth in the UK and US is forecast to have slowed somewhat, while EU growth is expected to have accelerated. Remember that the US GDP data also brings the first quarter estimate of the core personal consumption expenditure deflator, the PCE, the Fed's favorite inflation target. That's a key number as well. We'll also get CPI data from Australia, Japan, Germany, and the EU. Remarkably, inflation is forecast to have softened across the board, despite the rise in oil prices. However, several central banks have mentioned the rise in oil prices as increasing their confidence that inflation will recover in the medium term, so these reports may not be as big a factor as they might have been a few months ago. As for today, Monday, the main feature will be the IFO indices from Germany. The current assessment is expected to decline somewhat, but the expectations index, the more important of the two, is seen rising. That should be slightly positive for the euro. The Dallas Fed Index will be closely watched after the Philadelphia Fed Index came in far below expectations, and the market U.S. manufacturing PMI dropped unexpectedly. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.